Hi, this is Phil at the Laptop Trader channel on YouTube. Welcome back to our community. I'm here to share my experience and give back to the stock investing and trading community one video at a time. Again, this video series is going to cover market cycles, stocks, ETFs, technical analysis, trade entry, trade management, risk management, and how to create confidence by putting the odds in your favor. Good luck. My email contact is laptoptraderphil@gmail.com. Caution, most stock traders lose money. Please protect yourself at all times. Nothing discussed in this video is trading or investing advice. This channel is for informational purposes only. Please seek qualified help if you need help investing. So let's get to it. We're in July now. Start now by educating yourself and finding out what is right for you. Invest in yourself and then invest in the markets. Just a quick review of money management. 3 steps to good money management. Personal money management, having a spending plan, risk management in your trading, position sizing, having some loss levels, using share sizing, stop losses, calculate your risk to reward. And this month, again, we're going to continue on with trade management. Some of the questions you need to ask yourself when you're in a trade, or even figure out before you ever enter the trade, where will I exit? Is my approach compatible with the current market environment? Am I going to use all or nothing management or taking some money off the table? Which is better? What happens if I stop out? Those are questions we basically answered last month, so check out that video. Again, trade management continued this month. The reason why I'm focusing on trade management is because over the years, it's really made a difference in my trading. So that's why we're going to continue on with this topic. So let's talk about holding on for larger gains. This month, we're going to look at 2 trades that I took in order to learn how to hold trades longer with less risk. We will also review 4 from last month that did not work with this strategy. So you understand this is not a guarantee. When you hold a position for a longer time, you do run the risk of price moving up and then retracing all the way back down, and even stopping you out. We can also talk about a safer entry using half the shares and twice the stop, expecting to move in our direction, and then adding shares later and reducing our stop while maintaining some risk controls. This month, I'll also cover 3 things to reduce stress when trading stocks. And when should I consider raising my risk level? So there's going to be quite a few charts this month, and let's get to it. So we're going to start out with this company. This is just a company that came across my scans. I decided to take a trade. The company is Leonardo DRS, symbol DRS. So here I just showed on a daily chart, I had an entry at 24.15 on June 5th. We had a gap breakout over this consolidated area at a stop of 23.25. I set an initial target of 26.27 for a 2-to-1 potential on new price highs in the stock. And actually, I believe this slide is wrong. I believe the entry was actually on June 4th. So that may actually be the wrong entry date. But let's continue on anyway. So here, in fact, these 2 slides are from last month. I believe I was showing the potential entry, stop, and target before I entered the trade. But we can see I had a target of 52-week new highs, entry, stop, and we had some higher low price pivots, and price was starting to pull up. Price was starting to pull up these moving averages. You can see the short-term, medium-term, and long-term moving averages all pointing up. The red line is a stop. This line would be the entry, and then the target was up here. So you can see just visually the gap between entry and stop and this larger gap up to our target, providing for a good risk to reward trade. Okay, next. Now this is the same stock, again a daily chart, but this example reducing risk using our trade management. So now when we look later on down the road, price is over our first target, which was right here, okay? And almost to our second target, which is way up here. And the third target is actually off the chart, which was 30 per share. So we had a first target, a second target, and our third target, a little bit longer term target, is actually off of this chart. My current stop is above my entry points and almost at my first target. So I had, if you look at this, these lines I put on here, we had a entry, the green line, stop, and my target was up here. Well, now the yellow line indicates I raised my stop. So I raised my stop here under this consolidation area. And then when this large bar formed and this pivot formed over here, I raised my stop under that wide range bar. So you can see that my current stop is almost up to my first target. If price breaks out over this second target, I expect to sell half of my shares and take profits, and then try for larger gains with my other half lot of shares. So currently this is a profitable trade for me. I entered here, right? I didn't enter here. I actually entered here with a very small position, starter position. And then on June 5th, I added. So that first slide actually was wrong. Then over 8 days later, I added on this bar, and I reduced my stop for a good risk to reward trade. 10 days later, I reduced my stop under this green wide range bar. I now have a maximum position for my trading plan in this company. So I've got some maximum dollars I will commit to any one trade or any one company or any one stock. I'm currently at a max position on this trade. So right now, if I was to stop out, I would still realize a profit. This is just a chart, same thing, just showing just the price and those lines and the moving averages without any of my notes. So I thought I'd just put that in there for you, so maybe that gives you a clear picture of where I entered, where I raised my stops, and where my targets were. Now this is another reason why I took this trade, this monthly chart. This was in a monthly power uptrend. Notice the breakout areas on this chart where price moved up and then it consolidated for 3 months and then broke out, consolidated for 3 months, broke out. Now this is where I entered after this pullback. So we had a red bar, which did make a new high, but then closed inside of this green bar. Then next month, again, we had another red bar, but with a bottoming tail. And then next month, price actually gapped down, left a bottoming tail, and then by the end of the month was a full green bar, and then slowly pulled back. But it gave us this 3-bar turn setup, which I've talked about before, and probably, I don't know, either chapter 2 or 3 maybe. And so this is one of the reasons why I took this trade, is because we had this buy setup on this monthly chart, and you can see after that formed, prices did continue higher. So the monthly chart was key for me to even considering to take this trade, because it's in a power uptrend. So I was looking for a way to get on board of this stock. This is the same chart, but a weekly chart. So each candle or each bar is a week's worth of pricing. Notice the bottoming tail bar here, that minor price support, this bar right here. Bottoming tail bars are very powerful. It signals to us, or gives us a clue as price detectives, that buyers stepped up in that area. There's also this consolidation area which created minor support, and when price came down that minor support areas, buyers stepped up in a big way. Okay, in other words, the ceiling, what was the ceiling over here, is now the floor on this weekly chart. So again, that's using multiple time frames. I'm looking for an entry using monthly, weekly charts, and then this is just the pricing on the daily chart. So no moving averages, none of my chicken scratches, and no other lines to distract you from the price. So I just wanted to put this out here for you guys to give you an idea, where would you enter? Where do you think would be a good area for you to enter? And what do you notice about just the pricing of this daily chart? So there's several things that I noticed, and let's go to that next. So there's quite a few things on here, and there's even some stuff I probably missed, but there's several breakout areas on this chart. There's some wide range bars. There's some consolidation areas. There's a nice big floor here on where price created this floor, or this support area, which matches up with this other wide range bar with a bottoming tail over here, which matches the ceiling way to the left. So when we add all these clues together and we see this power move on this daily chart, we can see there's no pivots in 13 days. It's just basically price went straight up over 13 days, then pulled back, created a little support, and then we had this gap breakout, consolidation, another breakout here. And then I also put a few negatives that I see on this chart. We've got a topping tail on volume down here. We also have some additional selling volume, several days later. So that would be two potential concerns. But overall, I'm not concerned because I know my position. I know I'm in a profitable position. So I'm not scared if I was to stop out. So that takes a lot of stress out of my trading, and I hope that helps you guys kind of just always know your position, know where you entered, know where your potential exits are, know what your worst case scenario is, and know what your best case scenario may be. You have to think through these trades if you're going to be a good trader, if you're going to be a profitable trader. So this is just a slide I created, kind of maybe a overview or a summary of what did I accomplish on this trade. I'm still in this trade, by the way. I had an original entry of 23.66 for 20 shares. So I didn't go all in on this. My original stop was 23.25, and I had an original target of 25.19. So that gave me an initial risk of 41 cents per share. I had an original risk to reward based on my original target of well over 3.7 to 1, or 3.7 R. And I had a reward potential of 253 per share. So I had a reward potential in real dollars of just over $50 of reward. So it's not a big trade. It doesn't matter because the ratios will still work even if you're a big shot. Okay, so if you want to add some zeros on this stuff, go ahead and do that. My current average entry, because I added to this trade, is 25.16. My current entry is actually 25.16. My current stop is 24.70. And then my current target is 26.28. And I have another target above that of $30. I still have a current risk of 46 cents per share. So you can see that versus my original risk, it's only 5 cents more per share of risk. I have a current risk reward of over 2 to 1, 2.4 to 1 R or 2.4 R. And I have a reward potential of 112 per share. I also have a potential target of 30. This is where it can get fun. If it gets to this potential second target or third target, I've got a 10.5 R reward potential and a 484 per share, either on all shares, or even if I sold a half lot of my shares, I'd still realize over a $96 gain on this fairly simple trade. So what I'm saying there is that I could still sell half, take a nice profit, take some risk off the table, and still have another half left for a longer term trade. So if I want to hold this over months, I've given myself a favorable position to do that. So can you see why I may sell half now and hold half to try for a larger gain? I lower my risk immediately and I hold half for more potential profit. Whenever you sell a partial, you're immediately taking risk and profit off the table and putting money back in your profit, putting money back in your pocket while still remaining in the trade. So that's kind of one of the things I use in my management now to try to stay in trades longer. If that doesn't make sense, then you can always go back in this video and review these charts. Okay, I hope that helps out. Let's move on. Let's go over last month. I didn't recommend, but I gave 4 charts with 4 companies as examples last month. Let's just see what happened since last month. So this is a company called Old Republic International, symbol ORI. We had a power move up off of the bottom here after this double bottom where prices moved up, and then we had an earnings event. Prices retested that low and then just went basically straight up from there. Okay, so that's a power move up after a bottom support retest, major support, and a double bottom. So that got me more interested in this stock. But that was the reason why I became interested in this stock, was that power move up. And so we're not trying to call the bottom or find the bottom. We're trying to find stocks that have already moved, and then we're trying to get on board. Well, price made a new high after that, right here. This little half circle is a new high on my charts. Then it sold off and retraced lower about 80%. So between here and here, we would call it 100%, and then it retraced about 80%, 75, 80%, okay? So strength turned back to weakness very quickly in this stock. So I never did take a trade on this because of that. So this just went back onto my watch list. So it was interesting for a moment, and then it wasn't. And simply, I never took a trade in this, but it goes back on my watch list when things don't work out. And so I just continue to see, is there an opportunity to trade this name? So let's go to the next one. So this is company Elanco Animal Health, symbol ELAN. This trade had a favorable or a nice reward to risk after an earnings gap over here and a breakout to new highs over here. Unfortunately, after I entered, price just consolidated for 2 weeks. So this is one I actually took. I entered over here, I believe on this bar. And after that, price just kind of drifted sideways for about 2 weeks, and eventually a gap down here and stopped me out. And just so you know, there was no earnings event or company or analyst news I could find for a reason for this gap down. Things happen. Please use some risk controls in your trading. Because of this gap under my stop, So my stop was here. Here's the green entry, here's my stop. Because of this gap under my stop, I lost over $60, or I had over a 2R loss. Earnings were back here. There was no earnings event when this happened. Things happen in the markets that sometimes you just can't explain. You have to accept that as a trader. There is something called overnight gap risk. You must be aware of that. So because I had my stop loss, I was able to stop out towards the top of this red bar and not down here, because the stop, or my stop loss, was already in the system. Things happen, that's the way it goes. So that's one that definitely did not work out. And this purple line on here shows where I stopped at overnight gap risk. Please don't forget that. This is a chart of company Designer Brands Inc., symbol DBI. This one I did not take as a trade, even though I liked the tight consolidation over several weeks and the breakout to new highs. So right here. So this stock actually broke out here, and the next day put in a wide range green bar, making new highs. I didn't take it because the very next day there was an earnings event. So while I expected this to continue higher, it simply gapped down on earnings and never looked back. So earnings are a time of volatility. Be careful. You can see price never recovered after that event. So this is another one, just goes back onto our watch list for the future. This is a chart of Orion SA company, symbol OEC. Here we had a failed breakout from May into June. This was a support area. You can see that here on the chart. Price was over all the moving averages at this point. It made a new high. And for whatever reason, earnings were back here. So this was after earnings, well after earnings. And after that point, it just started to sell off. And once it broke the support, that was it. So we would consider this area, before making a new high, this area would be considered major support. And once it broke that, it just never looked back. So stocks can make new highs and then fail. That's just how the market works. You have to accept that. Now let's look at some winning trades. This is another one that I took that was a winner. This is a daily price chart over a 3-month period. And you can see just here, this over here, this half circle again would have been a new high at the time. During earnings or going into earnings, the stock actually came up to that point and then sold off pretty hard after earnings. I got involved over here, and then I was able to realize the gains after that up to this point. This is still an open trade for me. So this just shows the green line is entry, red line is stop, and this first purple line was my target. So I had decent risk to reward on that, and then the second target was up towards these highs again as far as the second target goes. So let's take a look at the next chart. This just shows the weekly chart, and kind of one of the reasons I took this trade was because of this weekly chart. Remember, stocks making new highs do not have buyers holding losses. Most traders or investors on this chart are holding a profit. So there's either no reason to sell or not as much of a reason to sell on this chart. You have to remember, large institutions tend to commit way more than individual traders do. So when stocks are making new highs, they tend to commit to that. And that's less of a reason to sell. One clue that I know that's the case is you can see this volume spike on earnings. And ever since that time, volume has really come down more to a average level or even less than an average level. And there is some interest here around earnings. You see the price bars expand in range, and volume tends to increase around earnings. Well, after that earnings event, price started to move up out of that support area. So even though this was a wide range red bar, price after that started to move up, and that's what got me interested in this stock. It showed that institutions were more committed to buying the stock than selling the stock. So that was one of my bases for taking that trade. This is just another, I believe this is a daily chart. Here are just all my lines showing entry, stop, target. Real quickly, there's entry over this green bar. I'm sorry, entry is probably on this wide range bar here. Over this area. Stop. Target was up here, so I had a favorable risk to reward on that. The yellow line is where I raised my stop. This yellow line is where I raised my stop again. Another raise here. This was another raise. And then once I got to this target, that was the first target, second target, and third target on this. So here, using a chart for trade management, whether you sell some shares to reduce risk or you simply raise your stop to reduce risk, you can create some very favorable trades for yourself using trade management. My current stop is about $1.50 over my entry, which would be right here. My original stop was about $1.25. So I am 1R simply raising my stop. My plan rules allow me to do that anytime there is a wide range bar after my entry. So back here when we entered, we just kind of had this back and forth pricing, and then all of a sudden this big wide range bar came in, really accelerated prices higher, and then later on we've got this pivot now. So that's why my stop was raised here, because of this pivot and because of this wide range bar. So I'm trying to hold on for larger gains. Sometimes people look at their plan rules as limiting, and I used to also do that, but the more I traded, the more I found out my plan rules are there to help me and to protect me and to remind me of why they're a rule in my plan in the first place. It's because of previous experience, right? So in the past, I may have just taken profits at this first target and not held on for larger gains, or in the past, I may not have raised my stop, or I would raise it too early and get stopped out. So that's kind of where sometimes that's where some of these rules come from, is just from experience. And you'll have to gain that for yourself. But right now, this is still an open trade for me. This is a chart without markings or moving averages. So you can see the higher target and my points where I raise my stop. So you can see I've had 1, 2, 3 potential targets. We're already over target 2. And then long term, I like this area up here is a fourth target, or a longer term target. So here's another example when it comes to trade entry using an intraday chart. This is a 60-minute chart to find a favorable risk to reward entry. So just because you're a longer term trader doesn't mean you can't use an intraday chart. Okay, so it's okay to use multiple time frames for entries and exits. But just based on this intraday chart, we've got over a 4-point potential on less than a 2-point risk. So that becomes a favorable risk to reward trade, right? So you can see the entry stop is pretty narrow. The target's up here. Price moves up there, that would be a favorable trade, even if it doesn't get there the same day. This is a little bit longer term chart. This is a 120-minute chart intraday, so that's double the previous chart, but you can really see clearly now why I like this chart because of this wide range green range expansion bar, which closed on a closing basis over all of this consolidation and over all this short-term resistance. You can see, I believe price is going to make it up there. Again, just because I'm a swing trader does not mean I cannot check the intraday chart for a favorable breakout entry. Use multiple time frames to your advantage. This is the daily chart of the same company, US Mobile, USM making a turn up out of a daily chart support area over the purple target 1 is new 52-week highs. So this is a trade I entered expecting this to really start moving up and continue to make new 52-week highs. And if you look back, this was a new 52-week high. This bar was a new high. These bars going up are new highs. This created this new high pivot. So I think it's going to do that again. That's part of the basis for that trade. This is a example, another trade that I'm in, of New Scale Power Corp, symbol SMR. This is an intraday chart, 120-minute chart. This is a clear picture of a stock off to the races on a 120-minute chart. You can see entry, stop, and target, and I am already past my second target area. So you can see entry, stop, target, and my second target area is the second purple line. So I've already exceeded that second target. I already sold half of my position for a 3.7 R gain. And the other half is a free trade with little risk. Even if price came down and hit my stop, that would still be additional profit. Hopefully that makes sense to you guys why I took that trade. So this is the daily chart making new highs. Again, no one is holding a loss on this chart. We do not know how high this price will go. Try to hold on to your trades longer using trade and risk management. Remember, anybody that bought over here, or wherever, nobody's holding a loss. There's no reason to sell. Again, these lines on this chart, there's no moving averages here either. So there's no indicators, there's no moving averages, there's price volume, and where I entered, stopped, and have my target set. So if you think you need a bunch of indicators or you have trouble reading price, I think it'll do you a lot of good if you're part of our group and you're practicing reading price. Let's look at some numbers on SMR, symbol New Scale Power. On this one, I had an entry of 818, which was a half lot for me. I had under a $410 investment, a stop of 772. I had a target of 914, so I had target number 2 at 1075. I had a risk of 46 cents of risk per share with a potential reward of 96 cents per share. So I had about a 2-to-1 initial target. Target 2, I had a potential reward of 267, which is about 5.8 to 1 or almost 6R on that second target. So that's what I was really looking for on this trade. I was not as concerned about target 1. Yes, target 1 would be profitable, but I was really looking for that second target or higher. It does not look like much on the chart, and at the time of entry, a stock under 10 bucks. But if you can get a good entry and some reasonable targets, making money becomes easier when you match your management to your time commitment and your lifestyle and your account size. By selling half and creating some early profits and raising my stop, I have created a very favorable trade for myself and put the odds in my favor. At this time, I've created profits of 84.75 and a current risk of only 11.50 on the back half lot. I have about a 20% gain on a $410 investment. My current stop is 970, well above my entry. As a note, if I had 2R or nothing management on this trade, it would have resulted in a profit of $48. So not bad. You don't have to use any certain management, but if you just want to start out basic with a 2R all or nothing management, you could have really realized a profit on this trade of 48 bucks if you were using the same amount of shares that I bought. If these numbers are too small for you, just add a zero and keep the same ratios for yourself. So the ratios work whether you're new, whether you have some experience or more experience, or if you're a big shot. So keeping the ratios will work for any size trader. Different managements are a choice. An all or nothing management is very simple and therefore appropriate for new traders to use and get some experience trading. You simply set your entry, stop, and target for at least 2 to 1 risk to reward. You can then automate through your broker by using a bracket order, and if price hits your target, the system will close your trade for you. If price hits your stop, it will do the same. It's simple. You're either going to hit your target or hit your stop. A more complicated management like I use takes some time to figure out. You need to get a history of trades and some experience for yourself in order to do this. You may even have to ask for help if you're struggling and not becoming comfortable or making profits. My management fits my lifestyle, personality, comfort level, risk levels, etc. In my opinion, management is like a seesaw. There has to be some give and take. There simply is not a clear answer to this problem. There also has to be some reasonable expectations in your trading. Trying to hold for 10-hour gains on an intraday chart may be very tough to do, as an example. Let the charts decide the risk and reward, and then you take the trades that fit that profile. When is it appropriate to raise risk? The short answer is when you have a series of winning weeks, or preferably months, of consistent performance in your trading. That means your account is growing steadily and moving up in value over time. You may and probably will have periods of loss, but over time being consistent takes practice. This is why we suggest start small with $10 risk, and always raise it up later after you get the hang of trading. Remember, good traders win 40 to 60% of their trades, and some only bat 30%, but they get big winners. A successful trader is a mix of winning percentage, average win versus average loss, and taking your losses in stride. Two things that will really affect your performance, and those are some big winners and some big losers. Losing big will put you out of business. I also have 3 tips for reducing stress when trading. First of all, keep your job. This is not a scheme to get rich quick. You need to keep your income and continue to fund your trading activities. A larger account value will allow you to take more trades or buy more shares and later on raise your risk levels. Calculate your risk before entry and use a pre-trade checklist and stick to your plans. Use a trading plan and a trade management strategy that works for you. Take profits and reduce risk will help grow your account and reduce stress. Get some early wins when you are new. How long does it take to get good at trading? I don't know, is the short answer. It took me several years to internalize and become comfortable with trading. All traders suffer losing trades. I think the difference for me between when I started and now is my level of comfort, and my trade management has progressed to a new level. I originally just did 2R or nothing, and I did make money, but I also took more trades. I also cannot answer how dedicated are you to doing homework and trade review and your ability to learn new things and your situation in life. Trading is unique as it is a lonely business. There is no college course or, for most people, no early childhood exposure to this business. Practice makes perfect, they say, and you cannot buy experience. So start small and stick around, and thanks for tuning in. We'll see you next month at the Laptop Trader channel, and check out our other chapter videos if you are new. My contact information again, if you have questions, laptoptraderphil@gmail.com. Don't forget to subscribe to get new video content notifications. Good luck. We offer stock market basics in easy to understand chapters. We also offer monthly updates on stock market topics, trends, and trade ideas. In closing, so you can get another visual, I would like to share with you guys my spreadsheet. This is the trade I took on SMR Company, NuScale Power. It just shows my entry date, when I sold half of my position, my initial number of shares, my entry, my stop, and target. And I've got second target here. If I were to add shares, it would have been in this area. And it shows my risk per share, my total risk, my total amount invested, when I exited, and when I sold half of those shares, the result of that sale, the profit and loss, and my return on capital. Okay, because I only sold half, I still have this open trade. So that's how I calculate my open trades when I sell half. So now you can see I only have, now you can see I only have, instead of 50, I have 25 shares at the same entry, same stop, higher target, and then if I raise my stop, that goes there. If I put my stop loss in this spreadsheet here, it will skew the risk to reward, and I'll come up with a negative number, so that's why I did that. And I've got another target above that of 1590. Again, 46 cents per share risk. Again, I'm only risking $11.50 on this trade. This is not a high risk, high reward trade where I have to go all in. I also want to share with you guys on this trade. Here you can see on DRS, I kind of scaled up. So I started out with 10 shares, then I added, so I had a total of 20 shares. I added again, and I sold some shares, and I added again, and now today I have a maximum position per my trading plan of 40 shares, entry, stop, target, and I'm looking for new highs on this trade. And this one shows a total risk of $18.40. Okay, not a huge risk, but I've got a max position. My max position for my account is $1,000. So I'm $6 over that. That's why that's an orange. But on this trade, I've already taken some profits. And you can see that here where I took $51 off the table for a 3.4 hour gain. Okay. This is why sometimes these spreadsheets will mess you up. It's showing minus 36R on this trade. That is not accurate. That's because of the, I don't know why that is. 'Cause entry stop is below that. I'm not sure why that went negative, but it did. Anyway, that's where I'm at on these trades. We'll wrap it up there. Go back to my contact info for you. There's that. Close the video there, guys. I'll see you again in August. Please check out our other videos. Or if you want to watch this month's stock market update video, that will be posted shortly. Thank you. Goodbye.